Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 31st of the 5th to Friday the 4th of the 6th, 2021. We've written up the weekly flows to get us underway. We're going to start this video as we write up the dailies to save time. But anyway, here we go then. So weekly flows then for the period 31st to the 4th. We've got the euro dollar minus 33. So over the week, the euro dollar as an FX pair lost minus 33 points or pips. Euro yen minus 79. Euro pound minus 8. Pound dollar minus 26. Pound yen minus 70. And the dollar yen minus 33. And if you look at the punch that into the model flows, you can see that we had a positive opposed driver in the yen at plus 182. Front and back door flows, mainly the opposing negative flows, mainly coming out of the euro at minus 120, out of the pound at minus 88, and the dollar was the positive rock at plus 26. Activity plus or minus 208. Relatively low activity for the week. But that doesn't tell the whole story, obviously. But anyway, we'll stop that there and write up the daily flows, so don't go away. Right, welcome back. We've written up the daily flows to get us underway. We'll rattle through these and then do the analysis. Okay, so Monday the 31st, we had a negative unopposed driver in the dollar at minus 80. No backdoor flows. The opposing positive flows mainly going into the yen at plus 37, into the pound at plus 23. And the euro was the negative rock at minus 20, activity plus or minus 80. Tuesday the 1st then, we had a negative opposed driver in the pound at minus 179, front and back door flows mainly going into the yen at plus 121, into the dollar at plus 66, and the euro was the negative rock at minus 8, activity plus or minus 187. Wednesday the 2nd, a positive unopposed driver in the pound at plus 65, no backdoor flows, the opposing negative flows mainly coming out of the yen at minus 49, out the dollar at minus 11, and the euro was the negative rock at minus 5, activity plus or minus 65. Thursday the 3rd then, we had a positive unopposed driver in the dollar at plus 226, no backdoor flows, the opposing negative flows mainly coming out of the euro at minus 104, out the yen at minus 102, and the pound was the negative rock at minus 20. Finally, Friday the 4th, we had a positive opposed driver in the yen at plus 177, front and back door flows mainly coming out the dollar at minus 171, and out the euro at minus 15, and the pound was the positive rock at plus 9, activity plus or minus 186. Okay, so we'll just write up the analysis and then we'll do some discussion on that, so don't go away. Right, we're back, so let's do the analysis then. Just to remind you, over the week then, what have we had? We've had the yen positively driving as the unopposed positive driver at plus 182. So the yen has been driving in a positive manner, and the opposing negative flows have mainly been coming out the euro at minus 20 and the pound at minus 88, and the dollar's been relatively static at plus 26 as the positive rock. So we've had yen strength, euro weakness, pound weakness, and a fairly static dollar. But it might not have felt like that while you were trading it. Right, so we've written up the asset classes. We've got the US dollar index. Basically, it's at or near the lows. It's come up a little bit, but it's come off yesterday. It's 90.11. Gold then, so it's a soft dollar environment. Gold's 0.25 from the modelled high. Still not made it, but getting there. Oil is really pumped, and it's 0.17 plus from the high. So it's got this breakout, and it's very strong at the moment. Wall Street went sideways, and it's basically 0.08 from the high, so it's about 8% from the modelled high. S&P is about 5% from the modelled high, and the tech, which has been lagging, is came up a little bit. It's 0.22 from the high. Right, US 10-year, and this is very significant. US 10-year, if you want to know why the markets have been difficult to trade recently, just look at the US 10-year chart on the daily, and you'll see that it's been whipsawing all over the place, and the bond market is usually looking quite forward. It's usually quite involved in fundamental analysis, so you can see what the market's in a degree of turmoil, and yesterday we had this big pump up in price. This is the price, so yields have come right off on the US 10-year, and the bund is relatively, although the bund came up a little bit, but it's fairly static at 0.45 from the floor. So relatively speaking, US yields are much weaker than the bund yields, the European yields. So, or European yields are relatively stronger than the US yields. Same difference, right? So copper's still struggling. It's certainly 0.45 from the floor. So we haven't had this commodity surge has really cooled off at the moment. US steel likewise is 0.33 from the high. Arguably, all these commodities are waiting for to see whether this infrastructure bill goes through in the States, amongst other things, and the China growth story, whether that can continue. Right, so we'll get rid of this and then we'll do the final analysis. Now our trades, we're about 3,100 points profit now, from a peak of 6,500. They came back a little bit yesterday. We were over 4,000 during most of the day. So, and what are we? We're short USD, dollar against the euro, the pound, and the AUD, and we're short NZD against the euro, the pound, the CAD, and the AUD. Okay, now there's going to be a sister video to this as usual, which is going to be the data cycle review for the same period, so watch out for that. That'll fill in some of the gaps. So what's been knocking this about and what's going to knock it about? Well, next week we've got Monday JPY GDP and the Euro GDP. So you've got GDP coming out. Wednesday you've got CAD rates decision, and Thursday the 10th you've got Euro rates decision. So you've got a bit of GDP data, a couple of rates decisions, and excuse me, we've got American CPI data, a bit of inflation data coming out as well. So they're the main events really. Last week then we had this relatively strong ADP report on Thursday. Then the NFP disappointed a little bit, and you got so we've got this like yo-yo effect in the markets via the data noise. We're sticking with our positions. Earlier this week we've done some long-term checks on the analysis and the modelling, and we're quite happy with these positions. If anything, we want to be bigger on the AUD NZD long. But we're just waiting for the right position to scale into. It's looking likely. Don't forget we've got the Euro rates decision. We do feel that the Euro complex and particularly the Euro dollar will pump into Thursday. EUR rates decision, and also given that the relative yield gap has opened up between the US 10-year and the bund, so it all points to favourable trades in the Euro USD and the Euro complex generally. Euro was sold off last week, so it's got a bit of elbow room to come up in the short term. So anyway, that's where we are. Hope that was useful. Try and catch the data cycle review sister video if you can. If not, see you Monday for the daily briefing. Thank you very much.